Hi everyone. Mastercard reported second quarter earnings results. So in this video, I'm going to review their latest figures and what it could mean for investors. I'm also going to update my recommendation of Mastercard stock in this video. Coming into these results, I had Mastercard rated as one of my top stocks to buy right now. So you're going to want to tune in to see if I'm changing that recommendation. So let's get right into it. Total revenue of 6.3 billion increased 14% year over year. Diluted earnings per share increased by 28% to $3. So excellent results in terms of revenue and profitability. Operating profit margin expanded by 340 basis points to 58.3%. Mastercard has one of the best operating profit margins of any business in the world. Not surprisingly, its rival Visa has the highest of any of the companies that I follow in the 60% operating profit margin. These two companies are both in my top stocks to buy, and you could see why. Their businesses are incredibly lucrative. Cross-border volume, which represents spending when people are traveling, increased by 24%. So people are spending and continue spending a lot more money on travel. What could that mean for travel related stocks? I've been bullish on travel related stock as well. If you look back on a lot of my videos, I have a lot of those travel related stocks rated as a buy, as well as Airbnb, which is in one of my top stocks to buy. Expedia and others are also rated as a buy, in my opinion, because folks are unleashing pent up demand for travel, and it continues across the board wherever I look. Just like I see here in MasterCard, it's further evidence that people continue to spend a lot of money on travel. There are 3.2 billion MasterCards in people's wallets. Now that's about 1 billion fewer than Visa. Visa has over 4 billion cards outstanding, but it's just a massive sum, and it demonstrates the decades of work that Visa and MasterCard have put in developing relationships with customers and merchants to build out this network that is now delivering such powerful profitability. Cash flow from operations of 4.6 billion was up from 4.2 billion in the second quarter of last year, a solid increase. The company repurchased $2.4 billion worth of its shares, leaving $6.4 billion outstanding. So management thinks and feels, when I see management repurchasing stock, it shows me that management feels their stock is undervalued. And unlike other companies where their CEO is out in public claiming how much they feel that their stock is undervalued, but not doing much in terms of spending money to buy back their stock, Mastercard is out there spending billions of dollars quietly buying back their stock. You're not hearing Mastercard's CEO go on a tour talking about how undervalued he feels or she feels the stock is. Just out there quietly repurchasing stock. And if you're a shareholder, this is something you have to appreciate. Now, as to my recommendation for Mastercard stock, I'm keeping it as one of my top stocks to buy. So no change there in terms of Mastercard. Its latest quarter, just reiterating my belief or my feeling that the stock, the business is doing quite well. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.